Good morning, everyone, and welcome to this SIF webinar today with China SIF. First of all, would just like to remind you to follow these quick rules. Please turn off your cameras, turn off your microphones. If you have any questions, please write them in the chat and do observe that we will be recording. My name is Kim Hansson. I'm representing SIF. SIF, the Sweden's Sustainable Investment Forum, has a mission to disseminate, drive, and raise knowledge about investments for sustainable development. We have about 130 members, their asset owners, their asset managers, and their service providers. One important way of reaching our target is to do events. Today, in cooperation with China SIF, we're doing this webinar to learn more about working with sustainable investments. And we're doing this together with China SIF. And today, as you can see from this agenda, the first speaker will be Peiyuan, who is the chairman of China SIF and the SynTao Green Finance. He will speak mainly about the 2060 carbon neutrality goal and how the market has reacted to that. And then also he will tell us a bit about China SIF. Following that, Jennifer Law, the head of index investing at China Southern Asset Management, will talk about how changes and opportunities has arisen from the carbon neutrality goal, and specifically how they try to use this in index investing opportunities. And finally, Lei FU, the founder and CIO of Y2 Capital Partners, a startup who is working to expand ESG investing by building a network of Asian ESG leaders and trying to generate a return by doing just that. So with that, I would like to turn the microphone and camera over to Peiyuan. Please go ahead.
Thank you. Thank you. Thanks, Kim and Rebecca, to host this event. My name is Peiyuan. I'm the chairman of China SIF and also SynTao Green Finance, and I will give you a bit more background information. But I just want to say thank you to Swiss SIF to host this event. This is our first time for China SIF to outreach to other SIF in the world. So I hope that we can work together more often in the future. And today's topic is about China's 2060 carbon neutrality goal. Next slides, I will talk about three things. First, I will introduce about SynTao Green Finance and China SIF. And second, I will talk about my opinion on this carbon neutrality goal. And my last part is about whether we can have some data available to integrate the so-called climate risk when we invest in Chinese companies. Next. About SynTao Green Finance, I'm the founder of SynTao Green Finance, and our work can be traced back to 2009 when we started to provide ESG data to a pension fund in Nordic countries. You can imagine at that time it was quite early stage, and very few data provider, particularly in Asia, not to mention in China. So we are probably the first one based in Beijing, and we cover Chinese A shares. And in the past 10 years, we expand our data coverage, and right now we cover all Chinese A shares and also some H shares listed in Hong Kong Stock Exchange. And at the same time, we also provide green bond verification service based on the standard carbon bond initiative and also the ICMA principles. And you can actually just 2 days ago, our data finally are displayed through the Bloomberg terminal. So if you use the Bloomberg terminal, you can also access to our ESG data. Next. And the next slide about China SIF. Yes. And because this area, as I mentioned, it was so early 10 years ago, and we need to do a lot of awareness raising, capacity build, and etc. When we talk to asset management firms 10 years ago in China, nobody knows about ESG. So we need to build awareness, and therefore in 2012, we founded this organization called China SIF. So SynTao Green Finance is the founder of China SIF, and it was first established in 2012. Why we also call it SIF? Because for me, I have been working on these areas for around 20 years. So I, of course, understand that there are SIF in many other countries, including Sweden and other European countries, Australia, Japan, Korea as well. So we follow this name, so we call it China SIF. Basically, this is an NGO platform for awareness raising and capacity build, and we also want to build it as a platform that we can bring in international connection and also China's experience. So we do two things. One is we do research. So every year we will publish some publications. If you go to our website, you can download the latest annual review on China's responsible investment. It's, of course, available in English. Every year we also do several events. The major events, our annual conference, normally in the first week of December, before Christmas, right? So first week of December. This year will be the ninth annual conference. And every summer we also have summer summit. And the forthcoming summer summit will take place on the 15th of July, and we will offer Zoom connection. So if any of you is interested in this event, you can we can provide a link through SIF later on. And by the way, we are also a strategic partner of UNEP FI in China, so we are helping UNEP FI to do some work, including TCFD related work, and the principle for responsible banking, etc. So that's the background. And again, I think I'm quite happy that China SIF started to outreach to SIF in other regions in the world. And this is a good start. So once again, thanks with SIF, and we hope we can outreach to other region as well in the future. Next. About carbon neutrality, definitely this is the most popular topic right now in China. If you go to the financial district in China, in Beijing, also in Shanghai, I believe, many financial institutions are now talking about carbon neutrality, climate change, and carbon market. And by the way, the carbon market is supposed to launch, the nationwide carbon trading market is supposed to be launched this month, which means either today or tomorrow, but I don't know when exactly, and there's rumors perhaps not this month. So, but the expectation is there, and the market has paid a lot of attention. I have never seen so many financial institutions talking about climate change and carbon issues in China before. I think our president, Xi Jinping, raised this goal last September in the United Nations conference. This is a surprise or not a surprise. It is a surprise because for the first time we have carbon neutrality goal. it's not a surprise because actually since 2015, I would say, China already showed ambitious goal and action plan on this climate agenda, particularly under the UN framework. So I actually list three time points here. So we all know now is 2060 carbon neutrality goal, but actually before that, when the Paris Accord was just launched or just signed, Chinese government already said that by around actually the wording was we will expect China meet carbon peak around 2030, And before that, in 2009, China raised the carbon intensity cut goal. So it is a reasonable step, I would say. Of course, China raised the ambitions on this because 5 years ago, we said that we will expect to reach carbon peak in around 2030. And the latest statement last year is that we will meet carbon peak by 2030, so before that. And the wording are slightly different. And also we will meet the carbon neutrality by 2060. And a lot of calculation and estimation under this carbon neutrality goal. And this one is one of this research, and this is developed by the Cambridge economics modeling. And the red line means that we need to cut a lot of carbon emission if we want to meet the goal. Next slide. And in China also, there are quite a number of research institutions do research on this. And this slide shows you a latest research carried out by Tsinghua University. There is a climate change research institute in Tsinghua University, and they develop a strategic research under different scenarios. So this is a 2-degree scenario. This is a 1.5-degree scenario. But no matter in which scenario, we need to do things in China. One is to cut the energy, so to divest, to remove the fossil fuel and increase the renewable energy. And second, the two charts on the bottom of the slides means we need to cut carbon emission in many key industry, particularly the industry and the communication, transportation, and also building sector, building material and construction sector as well. Next. So to sum up, I think there's 4 ways that we can achieve the carbon neutrality goal. One is energy reform. Second, energy efficiency to cut carbon emission in many sectors. And third, green lifestyle. I think we still expect that all the individuals in China or people in China need to think about sustainable lifestyle. And last but not the least is planting trees, forestation. Next. And what financial sector can do? Actually, in the high level, the central government, the central bank actually explained this to the market for several times. 2 things we need to go. One is increase climate investment. So I think carbon market, green bond, these instruments are one of it, so that we can mobilize more resources and capital to tackle climate change. And on the other hand, we also need to reduce the climate risk in the financial system. And actually, China very much thinking about this TCFD framework. So there are some pilot projects between China and UK to understand whether TCFD framework can be applied to Chinese financial institutions, including banks and mutual funds, etc. And the message is quite clear from the central bank, including the governor Yi Gang and also the deputy governors. It is to integrate climate risk into financial risk analysis. And the central bank would probably asked to do two things. One is ask for financial climate disclosure among financial institutions, particularly banks, which means banks have to calculate their carbon footprint in their lending assets. And second, to have some monetary policy based on this data. So we will expect there are some monetary policy related to carbon, maybe end of this year or next year. Next. And therefore, my goal, my opinion is slightly different about the carbon market. I think carbon trading market, of course, is a good instrument, but it's not all. It's not all, particularly if we compare with other financial instruments in the market, like ESG funds, green bonds, green loans. And I just want to give you a sense that the size of these different instruments are so different. And in China, we probably need to think more about how the banks react to this, how the bond market react to this, and how the asset management firms react to this. Next. And of course, if we want to do more on this, we need data. So that comes to my last part, 3 slides about data. What carbon data are available? 3 months ago, my colleagues carry our research to understand whether climate-related disclosure is good or bad among Chinese A-share companies. And the basic finding is that there are some disclosure. For example, among the 3,000 Chinese listed companies, there are around 487 disclosed greenhouse emission management, but only around 200 will make some quantitative information. So there's some information, but it's not very strong and concrete. Next. And we also benchmark the disclosure behavior against TCFD, governance strategy, risk management, and metrics and targets. And as you can see, that mining is actually the best sector, followed by transportation, etc. So the report is available in English on our website, and you can read it. Next. So we are doing some work on this because I think even though we will expect that regulators will ask for higher disclosure, but before we have sufficient disclosure from the listed company, we may have to do some calculation, even though it might be just an estimation. But I think we need to do that. So we just carry out carbon emission calculation among Chinese A-share companies. And this chart just show you some early stage findings. It's not, so we don't have a report yet, but I think it's interesting to share some early findings. The chart on the left side is the carbon intensity by sector. So you can see that utility, building materials, iron and steel are the 3 sectors that was highest carbon intensity. And because we have this carbon intensity data for each individual equity, and therefore we construct some portfolio and trying to see whether it has different performance. So we do two tests, and one is the carbon efficiency. 100 means that we select the most efficient, carbon efficient company among this CSI 300 benchmark and construct a portfolio. And it's quite interesting that basically they have a similar financial return. But that means that the carbon efficiency portfolio will have lower carbon emission as total compared to the benchmark. And we also, we are thinking about why this happened. And I think one reason is because there are so many financial institutions in this Chinese, in this CSI 300, the largest 300 company in China. And therefore we we use another approach. We just choose the high carbon sector. So within this high carbon sector, we select high carbon efficiency and low carbon efficiency in high carbon sector, and we can see some significant difference. So this is just some early stage testing. What I'm trying to say is that we will see more data available in the future and more disclosure from the listed company. But right now the data is not sufficient. So we need to dig out the data by our own, by estimate, etc. But with some data, we can start to do some testing and integrate the climate risk into our portfolio. So this is just very early stage, and I hope this sharing can have some implication, can have some takeaway for you. Thank you. I think I will stop here because just 15 minutes.
So thank you, Peiyuan. So I'm just jumping in right here. I'm Rebecca from the SIF board. And now we will hand over. Warm welcome to Jennifer Law from Southern Asset Management in China, where she is heading the index team as well as being a portfolio manager. Welcome, Jennifer.
Thank you, Rebecca. Thanks a lot. Thanks for the invitation. I'm Jennifer Law from China Southern Asset Management. My topic here today is to share with you opportunities from China's carbon neutrality goal. Addressing climate change has become increasingly important to China over the past 2 decades. Zero carbon emission has become a national scheme. Since just now, Dr. Guo has talked a lot about the zero carbon vision and also about the carbon neutrality goal. I think I'll just skip the first part. Let's move to the opportunities and challenges of ESG investments under the framework of carbon neutrality scheme, the part 2, please. Yeah, thank you. From our own perspective, ESG investment is the cornerstone for financial institutions in terms of dealing with the physical risks and the transition risks brought by climate change. ESG is also an essential ideology of responsible investing and low carbon investing. Let's look at the page 10. The ESG investment strategies under the carbon neutrality goal. Because ESG is essential to carbon neutral scheme in capital markets, we integrate carbon neutrality into our ESG investment systems. We have, I guess the last page, sorry. We have set up the page 10, this one. We have set up a preliminary zero carbon ESG investment framework, which includes 5 parts: carbon emission data collection, positive screening strategy, a negative screening strategy, engagement strategy, and carbon risk control. In terms of carbon emission data collection, we can integrate several external data resources to collect direct and the indirect carbon emission data as a basis for investment decision making. Negative screening strategies exclude enterprises that were proven to be detrimental to the environment. Engagement. We conduct engagement strategies are used to promote companies to focus on product and the service risk associated with zero carbon emission strategy. Positive screening strategies are used to invest leading enterprise of carbon neutrality transition. Carbon emission risk control strategy are used to control portfolio's carbon emission factor exposure relative to benchmarks so that the entire portfolio can work towards the zero carbon emission. Then we will talk about these 5 areas. Please, next page. Carbon emission data. The largest obstacle of integrating zero carbon scheme to invest decision making is data deficiency, as just Dr. Guo also talked about. According to the CSR report published in 2020, fewer than 30% of Asia companies publish CSR reports. However, we see a consistent growth in number of CSR reports published. We expect an increase in number of Asia companies disclosing ESG data upon requirement of authorities. Hong Kong stock market serves as a good example. According to the research conducted by Hong Kong Exchange about ESG disclosure of 400 companies, all the companies publish ESG reports within prescribed time frame. It's likely that listed companies are more willing to make ESG disclosure upon the requirement of stock exchange. Along with clearer disclosure policy and higher demand for ESG information by the capital markets, we expect an improvement of ESG information disclosure by Asia companies. So next page, and also next page. Then we can talk about the negative screening strategies and their applications. Negative screening strategies are used to exclude sectors that are proven to be or to be likely to be detrimental to the environment, such as power, coal power generation enterprise. We have been particularly careful about the investment in such areas. So under the carbon neutrality scheme, coal electricity will reduce to a lower proportion, and we are discreet about the investment and will be stricter upon the carbon emission risk control. Next page, please. The other application of negative screening strategy is excluding companies that have undergoing events that are harmful to the environment. Through integrating the analysis of corporate announcements, media sentiment, ESG ratings, we can gather negative news regarding the environmental factors. These public negative news affect the stock price. There are 3 categories of negative events. Also, we actually calculate the number of negative news for the past 6 months and then construct a negative environmental news factor. We figured out that the factor is good in stock picking. There is an excess return with the universe of CSI 300. Those with fewer negative news have excess return over the benchmark. The annual return for the long-short portfolio is approximately 6%. Next page, please. Corresponding to the negative screening strategy is the positive screening strategy. Positive screening strategy to invest in leading companies in climate transformation. Under the goal of China's carbon neutrality, new energy fields represented by photovoltaic, wind power, nuclear power, and biomass power generation will usher in extensive investment opportunities. Next page, please. Pursuing the vision of innovative, coordinated, green, and open development that's for everyone, proposed by the central government, we promoted green investment in the complex and changing capital markets in a bid to support the real economy and promote sustainable development. In recent years, we greatly increased investment in renewable energy while reducing investment in pollution-intensive and energy-intensive fields. As of the end of December 2020, our green invest totaled approximately RMB 100 billion, accounted for about 8.3% of the scale of AUM, which effectively supported China's green development. Next page. Relatively speaking, either negative screening and positive screening are passive ESG investment strategies. Corresponding to this, the engagement strategy will be more proactive and will play a more direct role in the implementation of the carbon neutral action plan for the company. Southern Asset Management had a well-established system to record every survey, teleconference, and inquiry conducted by researchers, and evaluate and file information related to ESG issues in a bid to urge investees to improve their ESG performance. Engagement outcomes would be accessed. We would evaluate proposals raised at shareholders' meetings and ESG impacts, and incorporated ESG into voting and decision-making as a vital factor. See next page, for example. Southern Asset Management, as a long-term shareholder of China Shenhua Company, has been engaging with the company closely in recent years. One of the projects required Shenhua to effectively reducing its annual carbon emissions. And as its shareholder, we expect steady and sustainable growth of the company. For this purpose, we engaged with Shenhua for several times, both online and offline, including meeting with its senior management and ESG team periodically to promote its ESG performance as a listed company, including establish a quantitative model for ESG and carbon emission, and also include increase the proportion of pithead power plants and enhance the management of tailing ponds. Okay, next page, please. Calculation of portfolio's carbon emission risk exposure is essential to carbon neutrality emission as well. Based on carbon emission data, we monitor and control the portfolio's carbon emission factor exposure. Warning will be made if there are high carbon emission exposure. And now, please come to the final part. I guess probably the page 22. Yeah, the ESG index investment opportunities under the carbon neutrality goal. In the context of global emission reduction trends and carbon neutrality, we conducted in-depth research on the investment value of the new energy sector. The growth is relatively certain, whether it's the lithium battery or new energy vehicle or photovoltaic, wind power, etc. It's expected to gain the value. Therefore, we launched the China Southern New Energy ETF in February. It's the first ETF in the Asia market that tracks new energy index, and it includes 80 renewable energy-related stocks. This index includes sub-industries such as PV systems, new energy vehicles, wind power generation, and nuclear power plants, which all have great potential. Carbon neutrality is an important strategy goal that humankind will begin to achieve in the next few decades. It has become a basic consensus that these industries have huge growth in the future. Also, next page, we can see an ESG application in customized index, the CSI Yangtze River Protection Index. Southern Asset Management actively participates in responsible investment, conducts extensive market research, and cooperates with leading research institutions in the market. And we will soon launch our ESG theme ETF. Due to the limited time, this is what I want to share today. Thank you.
Thank you, Jennifer. Very interesting. And we will come back to you with questions at the end. But now we will listen to the opportunity set, ESG investment opportunities in China. And we will hear Lei FU. Warm welcome to you, founder and CIO of Y2 Capital Partners.
Thank you, Rebecca. And thanks, Peiyuan, for your invitation, and thanks to Swiss SIF organizing the event. It is my pleasure to talk about I call it ESG improvers investment strategy in China, driven by the carbon neutrality targets and other sustainability megatrends. Next slide. Oh, yeah, sorry. So Y2 Capital Partner is a newly established asset management firm. Sorry, previous slide. Newly established asset management firm headquartered in Hong Kong with office in Beijing. Our mission is to really generate consistent risk-adjusted returns for our investors through driving Asia corporate's ESG transformation and scaling up the subsequent impacts. Here, transformation to us is improvement at scale. We believe today's Asia-China offers a very unique opportunity for such improver strategy. Our name Y2 is inspired by year 2 concept proposed by US astrophysics Carl Sagan in his cosmic calendar theory. Any moment from now on into the future is in the first second of year 2. So we at Y2 hope to sail through all the future environmental and social challenges together with our investors and investee companies. We also like the power of asking why. Why to have this webinar? Why to resonate with the questioning, why to invest, as we want to really challenge our investment thesis, as well as exploring the purpose, the mission, and the impact of our investments. Next slide, please. So very quickly about myself, I grew up in northeast China. After graduation from Peking University, I started my career as an energy and industrial investment banker at Goldman Sachs in Hong Kong in 2004. I moved to Goldman, New York in 2006. My main focus is actually advising clients on financings and cross-border M&As, mainly in the oil and gas sector. I joined Oxford Capital in 2007. I was responsible for my fundamental long-short public equity investing in certain I call ESG heavy sectors for Greater China. If I look back to the experience, governance, especially the management incentive alignment, is always a big area of focus, and more so, on E and S side. I really like to engage with the portfolio companies on potential risk mitigations and opportunities, which prove to be a very rewarding way of investing. I believe that the world is facing all the challenges, and we must need what I call the system change, where the market should be used to fix the biggest problems, such as climate change. And global investors, like you guys in Nordic, are transitioning towards ESG, but Asia is lagging behind, but will catch up. And there has been, I call it knowledge gap, not only in the issuer side, but also in the investor side. As for me, in 2019, I went to University of Cambridge for a part-time sustainability program. As one of the few Asian students in the program, I can feel the call for my action is even louder. We could be, I call the first ESG mover to really take advantage of the knowledge gap on ESG and sustainability before everything is priced in. Thus, after spending 13 years in one hedge fund, Oxford Capital, or Sculptor Capital currently, I resigned last year and set up Y2 Capital. My other partners who joined me together are Mr. Paul Ma, the former CFO and the managing director of Hill House Capital, and also Mr. Scarlett Yin, who also a certified ESG analyst and also a SASB FSA charter holder. Next slide, please. So now I would like to talk about the opportunity set that we see on the ground here, especially on the ESG improver strategy across different sectors. Next slide, please. So I think Peiyuan and as well as Jennifer talk about a lot about the big picture. I've been following the Asia economic growth for the last 2 decades. And over the last few years, the call for transformation into quality and inclusive growth has never been this loud. Y2 believes Asia, especially China, has political, economic, and social interests to really drive for wider ESG adoption. A comprehensive sustainability transformation is happening in Asia and China now. So in addition to our president's announcement on China's commitments to peak carbon emission by 2030 and carbon neutrality by 2060, we are very glad to see that in the 14th five-year plan also calls for sustained and healthy growth marked by, I call significantly improved quality and efficiency. And this is consistent with the core concepts of ESG. And then more importantly, if you may notice, there's no specific targets for ESG, for GDP growth, which needs to be dropped if China truly wants to transition away from an obsession with growth at all costs. And we expect China's actual policy and regulatory landscape will be developing very fast in the carbon, ESG, and the sustainability area. At the micro level, there are economic and social interests as well. On the ground, we are seeing Chinese companies dealing with the carbon challenges, energy transitions, and environmental issues, reacting with consumer behavior changes, and a lot of the younger generation demand in human capital management approach, etc., which are also reflecting in increased scrutiny from investors, both domestic and foreign, on corporate governance issues as well. Some companies even start to adopt the ESG differentiating strategies for the first time, and a few just announced their carbon targets early this year. So we are structurally bullish on the sustainability transformation here in China, which will be a key theme in the decades to come. All these will create winners and losers for different sectors and companies. So now, so what are the opportunities? There are core mega trends such as climate change and demographic change, and which to me, it's very clear they are making huge impact on many sectors shown on this slide. And these trends will drive growth for well-positioned companies and create risks for those unable or unwilling to adapt. Energy transition and carbon revolution is one classic area of opportunities. There are many companies that benefit or hurt by this change. Jennifer and Peiyuan mentioned a lot about this big trend. But more importantly, we believe ESG is not only about thematic renewable and the environmental stocks. There are overlooked ESG investment opportunities in many other sectors. For Y2, we adopt a more holistic stakeholder perspective on ESG. And to us, ESG investing is to include all the considerations of stakeholders, risk or opportunities into the financials, which hasn't really lent themselves into the financial statements. And we are, and these are the material area to the sustainable operation of a company and the shareholder value creation. So if you look at the slides, besides energy and power, industrial, built environment, consumer, mobility, financials, and healthcare and agriculture, each of these sectors do have opportunities that include new product services to capture upgraded consumer needs, operation improvements, technologies and innovation to provide solutions and capture the sustainability tailwinds. So these companies are well positioned to benefit from the transition to a more sustainable economy. But in the meantime, there are risks that could emerge as well. When it is the company is on the wrong side of the megatrends, including stakeholder controversies and resulting regulatory actions, companies could hurt by the changes, and stock price will reflect that. So the risks and opportunities in those sectors and the different rate of change in ESG adoption by the issuers are a new source of alpha and a new source of, I call stock catalysts as well. And we believe this is a continued interesting and large investment opportunities here in China through market cycles, in the future. So now, how can we capture such opportunities? So the investment philosophy that I'm going to talk today is, I would say, is the most suitable now, and it's suitable in this region as well. That is improvers plus engagement. I think Jennifer talked about the engagement a little bit, but I want to emphasize the power of engagement. First, let us look at the current ESG landscape. As a fact, and not surprisingly, Chinese companies and the emerging market companies in general have poor ESG performance. The best-in-class companies preferred by the growing passive ESG ETFs are rare to find anyway. So if you look at the MSCI ESG research data, over 80% of the issuers, in the MSCI China index component stocks are below the average BBB rating by MSCI research findings, and over 50% are in the two lowest rating categories, the BBBs the CCC and the single B. So this poor performance may be simply because of lack of knowledge, poor disclosure standard, incomplete information, language and culture differences. But that doesn't mean that these companies are bad companies. And in a way, the poor ESG disclosure by the local issuers and the awareness, poor ESG awareness by local investors, in China offers a very unique opportunity for the forward-looking, improving, and active engagement approach. Some of the 80% companies will be the ESG best-in-class one day, and they could be a very good quality company, and there will be fundamental re-rating is highly likely, and fund flow impact as well. So global and local mainstream asset owners and managers are gradually adopting ESG more seriously and adapting ESG in their asset pricing framework. So the local investment managers' job, like us, Y2 Capital, is to really do more work in this traditionally under-researched area, identify improvers or what they call the future ESG leaders ahead of the market. And this investment universe is vast, and the improvement potential or the delta is remarkable. And we are not constrained like other ESG screening strategies, and some of which are sort of backward looking. And you may ask, why would a company improve? Why do they listen to us? So we believe sustainability is a commercial business case, and the managers should even be the catalyst by engaging with the companies and delivering the messages on the top right box. So from risk management perspective, our message to investing companies is ESG and sustainability is a must. There are, and there will be more, macro and industry level policies to address sustainability challenges, such as carbon emission reduction and potential carbon pricing. And the entire supply chain verification requires what we call ESG re-underwriting by the global and local brands, looking into their supply chain, manufacturers. Regulatory requirements for better disclosure. And lastly, also on the risk side, is the social media exposed the stakeholder views and concerns in a very fast way. The stocks got impacted, by those social media complaints, and there will be regulatory actions as well. In the meantime, our message to the companies, from opportunity perspective, sustainability could be a differentiator and even a strategy. Consumer behaviors upgrade, especially the younger generation. People care about health, nutrition, buy EVs, go recycle, go digital, green hotels, green buildings, etc. So these companies can capture this demand and also could be, build competitive advantage ahead of the peers. And lastly, our message is about capital flow. Capital markets being institutionalized and open up for longer term capital and ESG funds inflow. All these are attractive points for companies to adopt ESG and sustainability. So by engaging with these investee companies, managers could catalyze sustainability or improvements as an investment case and unlock value. And the chart below summarizes the difference in this integrated long-short approach, combining fundamental analysis and the ESG analysis versus the traditional long-short approach. If you look at the right chart, we basically add delta in ESG outlook as one important dimension in stock selection on top of the traditional financial outlook. And we believe ESG factors can be a major driver of value for Chinese companies and their equities. And we want to long those current and future ESG leaders and short those double decliners. We do tactical hedging as well. We monitor those profit maximizers and altruists, and if we believe worthwhile, we like to engage with them to meet our criteria as well. So capture this performance requires a research-driven, active management focus with ESG analysis fully integrated into the investment process. And it has to be a one team. We believe an integrated investment team as well as ESG team is a much better approach than separate them out. For active investors, managers, with all these tailwinds, we should take advantage of the market early adoption as a first mover to apply this improver and engagement investment philosophy and process. So lastly, for Y2 as a firm, we are building a purpose-driven business. As a unique network, including data vendors that we find on the ground, consultants, NGOs, social enterprises, and we want to make positive impacts. Everyone in the team share the same long-term vision of responsible capitalism and passion in using ESG skills to drive returns. And this is our Y2s to work together. As a first mover, we are looking to build long-term relationships with asset owners and asset managers globally, especially in Europe, which is a very ESG is such a center concept in everybody's mind. And we together could even be the engagement catalysts or co-engagement for many future ESG leaders on their journey of carbon neutralization, capture ESG opportunities, and making positive impact. So with that, I conclude my my presentation today. Thank you.
Thank you, Lei. And that was very interesting to listen to. And I will just, since we don't have that much time, I will start with a question now from the chat. And well, I believe all of you could answer that perhaps, but I'll just read it aloud now. And it's both ESG and CSR entails the S, social. We hear a lot about corporate data on climate and environment is becoming increasingly available. Would you say this is also the case for social data?
Maybe I can take on this question first, because we did do a research together with PI 2 years ago about the ESG disclosure, and we also developed some policy recommendation to the regulators together with PRI. And it is true that for now, corporate governance information disclosure level is higher than environment and it's higher than social. So that's true. Why? I think the reason is because the government's regulation, how hard the government drive the disclosure. So as you can see, imagine the corporate governance is number one on the agenda from the government point of view, and therefore quite a lot of disclosure on CG, and then followed by environment, and then followed by the social criteria. But if you look at the criteria from at indicator level, actually the donation in the social indicator is quite high. 88% of the largest 300 company disclose that information. So that's of course not the case for other information. But I would say if we compare the current disclosure level and quality against the situation 5 or 10 years ago, we are improving. But of course, I recognize the facts that we need to push a little bit harder on the social indicator as well.
Okay, good. So if there aren't any other questions, I might just ask perhaps the last one then, and that is mostly to you, Peiyuan. Let's see, now there is some other question here. Well, I'll just go ahead and say that you described the 10-year history of China SIF, and if we look more forward from here to accelerated development, what would you like to see in the coming years when it comes to perhaps strategic alliances and partnerships working perhaps together with other SIFs? What would you wish for?
Yeah, I think that's the vision, and as I said, that the reason I named our organization as SIF, it's because we realized that it's a network and family worldwide about SIF. So after several years development, I think it's the right time for China SIF to outreach to other SIFs, and I think this event is a good starting point, and we will expect to do more. And I think there are several things we can do. One is some joint seminar, webinar, etc. I think communication and exchange are still quite important. Otherwise, there would be a lot of misunderstanding. And I think because when we can see the trend that China is opening the capital market, so more investor, more asset management firms are coming to China, and I think some of them are from Nordic country, and also Chinese asset management firms are also managing some money assets from the Nordic asset owner as well. And on the other side, I think we also see some Chinese company and bond issuers issue green bond and green assets in other region as well. So I think that kind of communication would be important. And secondly, I think maybe some joint research will also make sense. And recently, we are doing the research to understand the appetites of the overseas investor on green bond in China, whether you want it, and if you want it, and what criteria you hope to see when we select the green asset, when we disclose the environmental benefits. And I think that we will submit this research to the regulator as well. Last but not the least, when the whole world come back to normal under this COVID-19, we can organize some future study. Either way, either we organize some delegation to Sweden, for example, or we organize Swiss SIF members to China, and I think that's also possible. And what do you think?
Yeah, sounds like a lot of opportunities going forward. So interesting. And I saw that there was some question on social issues, but since this seminar is framed as we mentioned in the invitation around environmental strategies in China and opportunities, we will leave that question for now. And I will say thank you to all of our guests, the speakers. Very interesting to get this introduction to everything, and on the strategies on carbon neutrality, of course. And I also would like to say thank you to Kim for arranging this. We had some issues at the start, but now it all ended very well. So thank you all, and to all our listeners, I wish you a nice summer. And this was the last seminar, I believe, before the summer, and we will get back in August and September with new seminars. So have a great summer, everyone, and bye for now.